Welcome to the next training session of SAP FICO. Today's topic is accrued and deferral process, and the second one is recurring entries. Deferred and accrued process. An accrual is an expense that has not been paid or a revenue that has not yet been received. There could be two types of accruals. One is accrued revenues and another is accrued expenses. The other one is a deferral. A deferral basically delays the recognition of either an expense that has been paid or a revenue that has been collected. There could be deferred expenses and deferred revenues. So first, moving on, let's discuss further on this, what is all accrued and deferral process is all about. An accrual entry is passed when cost or revenues are accrued but not paid. Means they have been due but have not yet been paid. Financial statements are prepared under the accrual concepts of accounting, which requires that income and expenses must be recognized in the accounting period to which they relates rather than on cash basis. So the financial statements are prepared as per whatever has happened first. The accrued can be of two types. One can be accrued revenue and another is accrued expense. Accrued revenue refers to revenues for which a business has not received cash payment from the customer. That means a credit sale is recorded when a customer takes delivery of the goods, not when he pays the invoice in cash. So if you have made a credit sale, that will be accountable for your accounting entries, and on the basis of that your financials will be prepared. So in this case, the accounting entry made is the account receivable, that is the customer is debited and the sales account is credited. Once the company receives the cash payment, in that case the cash account gets debited and the account receivable is credited. But the major concern over here is that accrued revenue means if the revenue has been done but whether the incoming payment has been received or not, that is supposed to be accountable for the financial statement. The very similar is accrued expenses, where refers to those which a business has not yet made the cash payment. A company incurs interest on, for example, a company incurs interest on outstanding bonds throughout the year, but may make interest and principal payments semi-annually. That is an example of accrued expenses. The very similar example is, there could be many other examples of accrued revenues and accrued expenses. The bottom line of using the accrual and then do the reversal is, when you are not sure about the exact expenditure or income amount, but you do the posting based on estimations, which is known as provisions. We need to do our provisional accounting because we need to book these expenses or revenues in the same financial statement. This has to be reversed on the very next period, but for that particular period in which it belongs to, it needs to be booked in that period. So we make provisions for accruals, and those accruals are reversed on the very next period, on the first couple of days of the next period or next month. For example, a company is paying taxes quarterly to tax authorities. You can post accrual the taxes monthly, the estimated based on the tax paid last year for the same period, because you don't know what will be the exact amount of tax, but you can on the basis of your estimations you can put an accrual entry, that is a provisional entry in the system, so that your accounting could be very much correct, and you will reverse those on the very next month. You can do the same for the next 2 month or for the next half yearly, depending upon the kind of an expenses which you would be taking up. The accrual accounting principle is that you don't just reflect the expenses or revenues when the cash is settled, but when the business activity is performed. So it's a very important part. Now moving on to the deferral. Deferral entry is based on when the cost or revenue is still not accrued, but due to unexpected cost or revenue is going to receive because of this period, like deferred taxes, deferred revenues and all. Again, deferral are consequences of revenue recognition principle in accounting, which dictates that revenues can be recognized in the period in which they occur, and the matching principle, which dictates expenses to be recognized in the period in which they are incurred. Again, there could be a deferral expense or deferred revenue. Deferred expense is a kind of an expense where the cash has already been paid or the payment has already been made, but all services have not yet been used. It will be used in number of periods or even in the next year as well, but the payment already has been made. Like example of that is a very common example, prepaid expenses. A company purchases an insurance policy in which the first we always make the insurance premium payment for the whole year. Out of that, maybe certain premium is related to the current year and certain premium amount relates to the next year payment. So half of those payment is been taken up in the financial statement, in the income statement as an expense in that particular year, and the rest of the part which belongs to the next year has been taken up as a receivable in the asset side as insurance paid in advance. The same way deferred revenue, where the revenue has came into the company but the event has not still been occurred, and this is also known as unearned revenue. For example, a magazine company may receive money for 1 year subscription. However, the company has not spent the resources in producing and delivering those magazines. Thus, the accounts record this as a liability because the money has been received in advance, but the work which has to be done against that has not yet been done fully. So, whatever has not been done is a part of a liability, and that is why it is taken up as a deferred or as an unearned revenue. So this accrual and deferred is a very important part, and accrual and this deferral concept is used for income and expenditure accounts, as this is recognized when it is earned or incurred and not when cash is received or paid. So to very much make the accounting very much correct, we need to put various provisional entries for accruals and deferrals in the system, so that the profits and losses can be calculated accurately in the quarterly financial statements. Moving on to SAP, we'll see how this accrual and deferral provisions are done so that the accounting can be correctly done. Every provision entry needs to be reversed when we book the actual cost in the next month. So, so we can have a simple practical example like salary is made salary is paid to every employee at the end of the month, but the actual amount is not known. Normally the salary is paid on the very next third or fifth of the month, and we don't know what is the exact amount of a salary which will be paid to the employees, and in that case we make provisions in our accounting on an expected amount, and once we know the actual amount of salary which has to be paid, we make the actual posting in the system and we reverse that provisions which has been made. So we'll be doing the same thing in the system. We'll try to make certain provisional entries for accrued and deferral processes, and we'll see how these things can be done. So there are certain entries which are very much fixed in the business, which are known that these entries and the amount is fixed will be done in the business as a provisional entries, like uh, there could be insurance premium which has to be provisional entry for them has to be made at the end of the month, and it will be reversed on the very second, third or fourth of the month of the next month. So these kind of a provisional entries can be done in accrued and deferral process, where we make a provisional entry on the current month, last couple few days of the current month, and we put a reversal date on the very next month beginning. Any of the 3, 4 or 5th of the month date can be put, and the system in that case reverse that entry automatically, that particular provisional entries in the system. So this is very much helpful for organization, because there are certain entries which are fixed which has to be done and can be reversed, and you don't have to remember and have to go back again and again for them. So how this can be done in the SAP system, we'll check that. So for that you don't need to do any customization or any kind of a configurations at all. There are simple standard process provided by SAP. That is, we need to first create the provisional entry. We need to create the provisional or the accrual and deferral document, that is the accounting entry which we want to make as a provision, and once the provision has been done, we can reverse that provision with a different transaction code. So first we'll be creating an accrual entry now in the SAP system. How can that be done? So the transaction code for that is FBS1 for creating an accrual or deferred document. So once we go on to this screen, now over here you need to fill your details like the document date. Suppose I put the document date as 29th October 2014. You can put the type like SA, the company code 1200, 29/10/2014, and then the currency, that is USD. So once you do that, again now you need to put the reversal reason as well, because this is a provision entry, just to keep the current month's accounting very much on the correct path. So we put the reversal entry over here as 01, and reversal date as on which date you want to reverse the entry. So I am booking this particular provision amount on 29th of October, and I want this to be reversed on the next month, that is 3rd of November 2014. Now over here you need to select the entries. Now with 40 the GL account gets debited, so which GL you want to debit with? Suppose I take any GL for the provisional entry just to take the transactions, that how these things will move. Like what we can take up as, there is no expense account, so let's do one thing, create a special scenario, actual practical scenario which does happens in the organizations. Like a very common example is salary, where we book a provisional entry on the end of the month for salary provision, and when the actual amount is known, we book the actual amount, and then that entry has been reversed on the next month. So for that we need a salary account and a salary payable account, so that we can book the provisional entries. So we need to create these two GL account with the transaction FS00. Now let's check the ledger accounts, the number which we can use in this. So the salary account is a part of expense and the expense GL starts with 4. So we can use the number 400002. We can go to this new entries, and now this is a part of expense, balance profit and loss account, take it as salary account, then the same salary account you can go to the control data. Here you need to take the line item display only, because profit and loss account you cannot select open item management for profit and loss account. Then next we can go to create bank interest. In this, if you remember, for all the expenses I have said that the filled status group will remain G004 over here. So this has been selected and you can save it. Your salary GL account has been created. Similarly, we'll be creating a salary payable account, and salary payable account is a liability because it has to be paid. So a liability GL starts with the digit 2. So in this we can use 200004. So let's create a liability over here, 200004. We can go to new. Now we can create the description over here. It's a part of liability, so we need to select the liability. Then this is a part of balance sheet account. We'll select the balance sheet account. Over here we'll be taking salary payable, moving to the control account, same thing, line item display, and we can select the open item management over here as well, because when we reverse the entry, the entries will get cleared to each other. Then going to create bank in this, bank and interest, the filled status group can be taken as G001. So this is what you need to take for salary account, salary payable, which is a part of a liability. Save it. So now we have created this 2GL account, and now we can take a practical case where provisional entries are always made at the end of the month for salary purposes. So depending upon the previous years of salary paid, we make a salary provisional entries in the system. So that could be two way outs: either you put a manual entries and then go back and again reverse that entry in a different date, or the another could the way out could be this accrual and deferred, where while posting the entry we put the reversal reason in it as well, and on the very day in which we have to reverse it, we just need to go and execute the transaction. We don't have to put the data and have to fill it again and again. No need of that. So it is FBS1, enter, take the date, like I am taking the date of the last month of October just as a provisional entry, and then I will be reversing that entry on the 3rd of November. So now I will be debiting the salary account so that my income statement will be very much correct. So what I need to do is I need to debit the GL. So to debit the GL I need to take the posting key 4040. Now I have to debit the salary account, because as a provisional entry which we make, in that the salary accounts is debited and the salary payable accounts get credited. So when we go and we select the salary account over here, so we can select the salary account. Once we have selected the salary account, click onto the enter button, enter. It will take you to the next screen, enter again. Okay, 01 is not permitted, little later. Okay, we can put 02, and now we can take, so suppose the amount of salary which has to be paid is 1,120,000 US dollars. You can put the text salary provision for October 14. Now we can go and we can take this is the debit part which you just taken, debit entry over here. We need to take the credit entry as well. So for credit entry we'll take the posting fee 50, and the GL account which will be selected will be salary payable. So the salary payable account over here will be selected, enter. It will take you to the next screen. Again you need to select the credit amount over here, text same. So this is what the entry we made, and now we can simulate this entry over here. So it's a normal entry which you used to do, but just the case over here is that over here we put the reversal reason as well, so that on the date on which the reversal has to be done, on that day we just need to execute a transaction and the entry will be reversed automatically. So now this is the entry which will be done, and we can save this entry over here, post, and your accrual or the provisional entries will be done. So the business area has not been filled in the line item 01. So line item 01 is this upper one. So we need to put the business area first in this. More. So assign the business area. Now we can again go to simulate, and now we can post the document over here. So the document number has been posted. So once the document has been posted on 29th of October, that is the provisions have been done, and now I want to reverse the provision on 3rd of November. So for reversing the particular provision we need to go to the transaction f.81. So for f.81, now if you execute, enter. Now over here you need to put the company code 100. You need to put the year. You can, okay, no problem, execute it. So once you execute, you will find the document numbers over here. So if you don't remember much, that's not a problem. You can put the company code, you can put the fiscal year, and then you can execute the transaction. It is always been executed in a test run just for the checking purpose, and everything things are confirmed and okay. Then we tick this test run out and we execute. So we can execute it now, and we can have that there is only one document which has been processed as a provision. So that is what this is. Over here you can see document number has been reflected over here. This is it. So if there will be multiple provisional entries, that all will be reflected to over here in this screen to you. All document number will be reflected over here to you. So whichever you want to reverse, you can keep the cursor on that particular document, and you can go back and you can reverse on with this reversal document option. So let's reverse this document, reverse this provision. For that we need to take this test run off, and then we need to execute this. So let's execute. Now we can put the cursor on this. Okay, and now when you put the cursor on that, you can see reversed with document 14. So once you click on this, the document get reversed. So number of document reversed is 1. So you can see over here that the option over here reflecting to you that the reversed with the document 10000014. So the provision entry was made with 13, and the reversal entry has been made with 14. If you want to see this document 14, we can even have a look to that as well. So you can go back and you can check this entry. with /O FB03 for enter. You can see now the reversal entry over here. The entry has been reversed against the original entry. You can go over here to the header and you can see the transaction. The transaction is FB08, that is the replica of F.81. So this is how the document get reversed in the system, and this is how you need to follow the accrual or deferred process for your system for putting all the provisional entries in the system as a part of it. So that is all about the accrual and deferral documents. Let's move to the next topic, that is recurring entries. Recurring entries, business transactions in financial accounting that are repeated regularly again and again, such as rent, insurance, premium, etc. A template can be maintained for entries that are frequently passed each month. Now, moving on to ahead, recurring entries are the entries or the transactions which happen in any organization on a regular basis, where the same entry with the same amount has to be processed each and every month. And for that, the accountants need to go back to the bank account to search for the GL account, then the amount, interest, and a lot of things. And he has to manually process each and every month and has to find those details again and again. So that is what a recurring entry is all about, where the amount are fixed and the accounting entries has to be processed again and again. Now in SAP, some business transactions are repeated regularly every period or quarter, such as rent, insurance, royalties. SAP gives the recurring entry option to make this entry one time and run it every period and have the same financial effect. Recurring entries in the system are only a reference document and has no accounting impact. So what SAP provides is we can create a reference document which is known as a template, and that same template can be used again and again whenever it is needed for every month postings, where in the template your debit and credit entries, your loan number, your amount, everything will already be there. You just need to change the date and you can post that particular recurring entries. Like, take a practical scenario. Suppose there are 10 different accountants in a company. They need to pay recurring payments such as interest payment, royalty payment, rent, insurance premium, etc., whose amount is fixed and which has to be paid on a fixed date of the month. With recurring entry setup, all your recurring payments can be configured to run it automatically. And the same thing which is done by 10 accountants now can be managed with one accountant itself. All your accountants do not need to remember all those payments, because all those payments, a template can be made against that. With recurring entry setup, all your recurring payments can be processed or configured automatically. They can use the recurring entry configurations where they need to give the payment date, amount. So the system will go ahead and run all those entries on the selected dates. As a one-time activity, the entry can be maintained and the same entry can be recalled each month, and the entry can be posted in the SAP system. So it is all about a template that can be maintained for entries that are frequently passed each month or quarterly. Such entries are basically termed as recurring entries in the SAP system. So we'll be creating the recurring entries in the system and we'll see how that can be done. So the different transactions which is to be done for the recurring entries. Now there is no configurations involved in the recurring entry part. It is a standard process which is provided by the SAP itself, where the steps are as ahead. There are different transactions which can be used. The very first is to create a recurring entry, with the help of which we can create a template, and in case in the future any changes are needed, those changes can be done in the template with the second transaction, that is FBD2. The same document can be reviewed or can be displayed with the transaction FBD3. FBD4 is for the display changes which has already been taken place by in the system in that particular document. F.14 is to execute the recurring entry. SM35 for running the batch input session, and for evaluating the recurring entry documents, that is F.15. Now moving to the very first transaction, that is to create the recurring entry, let's move on to the system. The first transaction to create the entry is FBD1. Enter. So once you enter, you can see the screen enter recurring entry. In this, what you need to do is, first of all, you need to put your company code over here, that is 1200. Now over here we need to put the first run date and the last run date. The first run date means the date from which the first recurring entry is to be carried out. The last run date means the date until which the final recurring entry is to be carried out. Now in this you can have whatever the amount or the period you know that you have to pay for the recurring entries. You can take that much of amount or a gap. Like for example, if you know that the rent you will be paying would be maybe for 2 years, so you can put the 2 years of calculation over here as a first run and the last run. For example, suppose I take as 01112014 till 01102015 for 11 months. So I know that this is the rent which I have to pay from this to this date, and if there is anything else which you know that from an last run date, like for insurance premium, there the last run date could be much more larger than this, so you can calculate and you can put that last run date on the system. So the system will take this calculations month on month or quarterly basis as you want, till that particular last run date. So you need to first take the first run date, then the last run date. Now the next is to interval in month. So in this you can have a look. Now over here you have to decide the date up to until which the final recurring entry is to be carried out. So over here you can decide that whether the recurring entries which will be done monthly, 2 monthly, quarterly, or how. So suppose I pay the rent monthly, so I will be taking the per month over here. So these are the three things which you have to take over here. The next thing you need to take is the document type. So in the document type we take SA, because we are going for a GL to GL posting. So SA will be taken as a document type. Otherwise, if you are going for a recurring entry with relation to a vendor, then in that case you would be taking KA or something else in that. Moving to the next is the currency, that is USD. Now once we have done this, we will be making the entry over here. Posting key, the posting key will be 41st for debit and 50 for crediting something else. So suppose I take the 40 and I need to select the GL over here, what recurring entry I would be making up. So as of now, you can see that there are only 3 GL account for expenses which are there in it. So what we can do is we can create one GL account for expense for rent as well. Go to the new session, FS00, expense, profit and loss, rent, rent account, control data. You have to select the line item display over here. Moving next, the field status group for expense will be G004. Save it. Okay. So every month I will be paying a rent. So the entry for the rent will be, the rent GL will be debited and the bank GL probably would be credited. So with 40 posting key I will be taking rent because 40 posting key is for debit GL, the GL which you want to debit. So we'll be selecting the rent GL over here. That is it. You have taken the rent over here. Now you have filled this first page. Then what we have to do is to enter the screen. It will take you to the next. So there is a number range problem. The number range is missing x1. We need to go to the transaction code /o fbn1 with which we create the number range. If you remember, we did this in GL, AR and AP as well. So we need to take the company code over here. Then we go to this change interval. Over here we'll be adding the number range x1 as mentioned over there, x1 year 2014, and the number range we can define over here could be suppose 2900999. Added, created. So no problem. Now going back again, I can now enter the screen and it will take me to the next screen. So you can see it takes me to the next screen. Over here we need to put the amount of rent which I would be paying. Suppose I am paying for around $4,000. So we'll be putting up over here as $4,000. You can go to this more transaction for putting the business area. So over here we need to take the business area as well. Now moving next, you can write the text over here, rent paid for month November 14. Now over here you need to take the 50 posting key which will be credited. So now I am making the payment with the bank. So I will be selecting bank for the credit part. So suppose I take the bank over here on the credit part as outgoing bank, that is Citibank. Has been selected. Enter. Select the amount $4,000 business area and the value date. The value date would be 04102014. So this is what you need to take. Now we have filled the debit and the credit part, and we have taken the first run date and the last run date. That is what is important, and the interval on which this particular template need to be processed has to be taken. That's what we have taken as well. So now we can go to the simulate the document from this tab over here. So you can see the preview of the document over here, and if you find this to be okay, you can go and you can post it over here. So once you post, you find the document number has been generated 9009000. Now this document number doesn't mean that it posts any value to the account. It doesn't post any value to the GL or to the account at all. That is why I just said that this is just a template. It doesn't updates the values, or it doesn't hit the value in any of the GL accounts anywhere else. This is just a template, and on the basis of this template we can post the transactions on month to month basis without doing the repetitive work again and again. So now we have completed the first step, that is we have just created the recurring entry, that is the template for the document. Now we'll be moving to the next, that is to display the document, that is FBD3. So we can go back over here /n FBD3 to display this particular recurring entry as been seen. So you can see the transaction, display the recurring entry, enter. You can see the recurring entry which we just posted in the last part is over here on the screen, and in case you want any changes to be done, you can go to the transaction /n FBD2 so as to change. But mind it, you cannot change all of those things. What you can change is you can double click onto the rent or any of the line item, and you can change these things over here. If you want, you can change the amount as well. So it does happens at times that maybe there could be a small amount of fluctuation in the amount in case of royalties, or in case of maybe something else, maybe insurance or something. So in that case, even you can go back and you can use the same template, and you can change the amount and change the text as well. Like I would be paying the rent in the next month, so I would be coming back to this particular template. I will be changing this text over here from November to December when I will be paying the December month rent. So I can make those changes over here, and then I can save that particular document, and then I can process that for the business transaction postings. So that is what can be done. So this is how you need to create the recurring entry, and this is how you can change the recurring entry with FBD2, where you can change anything in it. You can change the amount, cost centers, business areas, text, anything in it, because this is a template, and in template anything changes can be done. Even if you want, you can add further things into it as well. Now moving to the next is, now how would we would be posting this particular in the SAP system. So to post the transaction in the SAP system, now we need to go to the transaction code F.14. So when you go to execute F.14 so that we can post transactions into the system, F.1414 executing. So over here we need to enter the document number and the period for which the recurring entry needs to be generated. The session name can be entered manually for easy identification. So over here we need to put the company code 1200. We need to put the fiscal year 12 or 2014. And now in this case over here we need to put the settlement period, for which period you want this particular entry to be done or the transactions to be posted. So suppose I am doing this for the month of November. I will be putting the month of November over here, or I think I did it for November or October. Okay, November 30112014, and then moving to the next. The most important part, you need to put the document number over here. So if you don't know the document number, how can we get it? You need to search that, and then only you can put it over here. So right now it is 9000000, as we know, and this is what you must have to remember it, mind it. So if you don't know, you can go back over here, you can search and you can put it over here. So now once this has been done, you can go for processing it. So you can go on execute option over here. Once you execute this, your transactions will get posted, a batch will be created. So executing the transaction now will generate a batch input session. A batch input session gets created. So now executing this, and you can see over here session SAP F120 was created. This is a batch input session which gets created, that needs to be further processed. So the session which is created at this footnote over here needs to be further processed, either in the foreground or the background, so as to check that there is no error in the processing of the transaction. If processed in the foreground, each line item screen will come up, and it is possible to change the values during the posting as well. So let's move on to process this particular batch input session in the system. So for that you need to go to the transaction code SAP SM35, that is the next transaction running batch input session SM35. So moving to the transaction /n SM3535, enter. Now once you enter, you can see you can find your session on the top of the list. You must remember your session name. So we have selected this, and now we can go to process, and this process we can select the first option, that is foreground, so that the screen will keep in front of us, and in case we want to make any changes anywhere, we can even make the changes in them. So click onto the process, and now you can see the screen. So you can see the screen over here. This is the first screen where the first run date is there. Now you can put the posting date is there, and the GL number is coming up over there. Enter. It will take you to the next screen, that is the 40 amount, and the 50 means the credit GL, that is the bank GL. Enter. It takes you to the next. Enter. Keep entering so that the system take you to the next step. So you can see now that the system over here, the message comes as processing of batch input session is completed. So once you get this message without any error, it means your document has been posted successfully by the system. So if you want to see the overview, you can click onto the session overview. So once you click onto the session overview, you will find that the document, that your session is no more reflecting on the screen, because the document has been posted in the system. So this is how your recurring entries get posted into the system. And in case you want to see that what was the recurring entry document number which took place or got posted into the system, we need to go to the general ledger account, that is the GL ledger account with the transaction FBL 3N. So in this you need to select your GL for which you want to check. So I just processed my recurring entry for rent account, so click onto the rent account, and now I can execute it, and we can see the document has been posted to the rent account. The document is 1000015. The business area is this, and the rent paid for the month of November has been mentioned over here. So this is how the things move. And now the next payment run, next recurring entry run which we will be doing, it will be on 1st of December for the next month rent. So this is how your recurring entry is done. You can do these kind of a recurring entry templates can be created so as to save a lot of time and manpower for any organization. And on the basis of this template, you can process it faster, and even it can be automated so that the system can automatically generate and post the transaction if there is no changes. But we always prefer to run it in front of us so that we can check back at once that everything processed is correct.